Something to do with me, and you too. I haven't seen this.
Good evening, everyone. Hello. I'm Sylvia Foster, and I welcome you on behalf of the First Unitarian Universalist Church of Exeter to our forum on community, a good hard look at socially responsible investing. It's great to have you all here. There are lots of other things going on, so we appreciate your presence. And we're very grateful to the panelists for their arriving here tonight and giving us their experience in this field of socially responsible investing. Our purpose is to learn how some investors are addressing the challenge of climate change, fair treatment of workers, inclusion of many voices, and a democratic governance. We want to know more ways that we can match our values to our investments. Peter Buffett has said that we have an opportunity for a new sort of revolution. Being his father's son, Peter Buffett knows investing. He says if revolution equals development, growth, and advancement, we can start by connecting our core values to the way we spend our money and invest. We have the power to revitalize our communities and build the bottom line of the companies that we care about and who care about us. So let's hear how we make that happen. I'm going to start with Sally Hatch in the middle, Director of Investor Relations for the New Hampshire Community Loan Fund. And to her right, David Lowing, Director of Sustainability for Pax World Management. And is there an associate with you tonight as well?
No, just me.
Okay,
tonight.
great. Welcome. And on Sally's left is Bob Marino, Board Member of Seacoast Local Community Capital. To my left, Allison Pyatt, Certified Financial Planner at Veris Wealth Partners. And Mike Smith on this end, Investment Advisor at Progressive Asset Management. Our plan for the evening is to begin with the questions from the panelists and just follow with a Q&A. During the Q&A, we'll actually take all of your questions at once and then put them on paper. And meanwhile, the panelists can figure which ones would best suit them. We've actually done this before, and it works really well. It's a surprisingly fitting way to do this. So let's begin. First, I'd like to have everyone speak as loudly as they can. If someone in the audience can't hear, if you just make this little symbol, then we'll up it. we'll adjust. The first question of all of you, and we can just go in our nice alphabetical order, or we can just go in the order that we are here. That's right here. Let's do first the mission of your organization and what role you play in it. And Allison, first.
And we are a highly regulated industry, so before I get started, I have to do a little boilerplate disclosure. Sorry about that. I'm with Veris Wealth Partners, LLC. We're a fee-based, independent, owner-managed, SEC-registered investment advisor focused on sustainable investing. We have offices in New York City, San Francisco, and Portsmouth, New Hampshire. We work with clients interested in having their wealth management services aligned with their personal values. And this is not an offer to buy or sell securities, and the investment strategies discussed tonight will not be suitable for all investors. Please make sure that if any of these excite you, that you read a prospectus carefully before you invest. Okay, sorry about that. That usually comes at the end, you know, with the drug commercials, the 10-minute long disclosure. So Veris Wealth Partners was started in 2007. I'm I guess the founding employee. It was the first person hired by the partners who started the firm. And we came together to create a firm focused on creating change in the financial markets. We really wanted to help not only our clients use their wealth to create change, but we wanted to create change in the bigger financial markets and in the bigger world. So we actively are out in the world trying to help other advisors make change through investing, and we're active in a number of initiatives as well. My role at Veris is I'm a wealth manager. I'm a certified financial planner as well, so I manage most of the clients in the Portsmouth, New Hampshire office, their investments, help them not only manage their portfolios for their personal financial goals, whatever those may be, but also try to really understand what it is they believe in and value, and how can I infuse that into their portfolio so that we're creating impact.
Sure, my name is David Lowing. Can I get an ear test? Sound good? All right. I am the director of the Sustainability Research Department at Pax World, which is a mutual fund company located in Portsmouth. We were founded a little bit earlier than Veris. We were founded in 1971 by two ministers who wanted to be able to invest their money without investing in the Vietnam War. So they wanted to avoid weapons manufacturing companies. And since then, PAX has evolved to focus on what we described as sustainable investing. So looking for companies that are leaders on environmental, social, and governance, or what we call ESG issues. And the idea is that those companies are going to be the better investments in the long term. So they're going to hopefully deliver superior returns for our shareholders. We also recognize that none of the companies that we have in any of our funds are perfect. So when we believe it's appropriate, we will try and engage those companies and try and get them to change their ways, either to stop doing some practices that we feel are harmful to the environment or harmful to employees or the communities where the companies are operating, or we try to encourage them to adopt new practices that we think are going to be more sustainable in the future. So we offer 7 mutual funds that hopefully achieve those ends. And we also have a partnership with Morningstar for asset allocation funds and 1 ETF. So and we have about 50 employees at this point. I'll stop there and we can...
ETF.
Last sentence.
Sorry?
Last sentence.
Oh, it's an ETF, which is an exchange traded fund. So you can, all of this you can go to our website, which is PaxWorld, PaxWorld.com.
I'm Sally Hatch, and my role at the Community Loan Fund is Director of Investor Relations. We are a 30-year-old, we're celebrating our 30th anniversary this year. We were founded in 1983. It really grew out of a project at the UNH Carsey Institute. As a way, the vision was to help people of low income to actually become more self-sustainable and really get a handle, to actually give people a chance to participate in the economy in New Hampshire. We are what's known as a CDFI in my world. That means Community Development Community Development Financial Institution, and we're recognized by the U.S. Treasury. We've been doing our work here in New Hampshire for 30 years. Our fund is just now topping off at $82 million, and this money is actually invested by individuals, religious organizations, foundations, banks, and other and individuals to actually invest into the community. We actually provide fair fixed rate capital loans to people who could not get loans from traditional banks. We'll talk more about that. It's a big, long story, but anyway, so I'm here to talk about an alternative investing where you're not investing in the stock market, you're not investing in bonds, you're actually investing right in your community. Thank you.
My name is Bob Marino, and I volunteer for an organization called Seacoast Local. I'm on the board of Seacoast Local. And Seacoast Local is a nonprofit, and basically what it advocates for is to have a more local, green, and fair economy on the seacoast. One of the main ways it does that is that it really focuses on local independent businesses. It believes that local independents are real key to make an economy that is more sustainable. So we advocate on behalf of local independent businesses, and we really try to encourage people to think about how they use their money in terms of the products and services they buy. That if you buy locally, that this will be better for your local community. And there's not only just economic benefits to that, but there can be even environmental benefits and social benefits. Besides, it makes for a stronger, more vibrant community. And one of the things we're looking at now, in addition to just encouraging consumers to buy local, is think about other ways to use your money, and one of them is to invest locally. So it would be, and come to find out, it's actually very difficult to invest your money locally into your community. There's a whole lot of regulations and rules that make that difficult for most ordinary people of modest means. So we're looking into that, and we have a few programs we're working on. One of them is called this Entrepreneur Showcase, and at the Entrepreneur Showcase, business people in the community who usually have incorporate practices into their businesses that are socially and environmentally responsible, they'll talk about what their business is, and often some of these guys are looking to raise some money. So that is one of the things we're trying to do to try and connect investors and local businesses. Another kind of similar thing, I encourage everyone to do this, is it's not really so much investing, or it's a very passive way to invest, but it is something that is very helpful to everyone's communities, is your savings accounts at banks, is to move that money to small community banks or credit unions. And that's a very straightforward and easy way to actually utilize more of your money to circulate back into your community. If you look at the amount of deposits at a large national bank, say a Bank of America, versus a Piscataqua Bank or an Optima or just credit union, they actually reinvest a vastly larger percent of deposits into loans back into the community, much larger than national banks. So those are some of the things we're looking at, and hoping we can find more ways in the future to move that along.
So my name is Mike Smith, and as Sylvia pointed out, I'm an investment advisor. And to be honest with you, when I first meet someone, the conversation usually comes around to, what do you do? And I tell them investment advisor, and you can literally see their eyes start to glaze over. And I usually try to get in that I work with clients who are interested in socially, environmentally responsible investing. By that point, they shut down. So, so what do I do? Well, you know how people like to have their investments follow their values. For example, some people like to support the environment, so they don't want to invest in Monsanto or Exxon to make money, or they want to support local organic food, so they don't want to invest in the big five agribusinesses like ConAgra or Archer-Daniels Midland. But they don't want to sacrifice financial return. What I do is I help people manage their wealth by investing in things which they support and which they believe in. So think of it as doing well by doing good, in a sort of nutshell way.
We have 3 more questions, and the panel can decide which ones are most relevant and highly relevant to you, and I'll let you go with your decisions. The first question has to do with divestment. Divestment has been in the news lately, and we would like to have your opinions on what alternative investments or actions are you recommending to help decrease the use of fossil fuels, coal, soot, and other materials that create global warming.
Well, first, I'll point out, I brought a number of materials about Varus and some thought pieces that we've recently published. One of them is fossil fuel investing, fossil fuel-free investing. It's geared towards the university crowd because that's where there's been a lot of activity on this topic, but I think there's a number of things in there that you might find interesting. For our firm, one, I think that we really believe in best-in-class investing, and I'll describe that because it's part of our everyday work, but not other people's. So in the world of socially responsible investing, you can have strict screens, which if you think about, David mentioned when they started PACs, they didn't want to invest in X, Y, and Z. So we don't want to be in the sin stocks. That's strict screen investing. We pull things out of the portfolio. And then along that spectrum, you start maybe investing in things that you want to create change, but you'll invest in the companies that are leaders in their particular industry, and that's what we call best-in-class investing. So we may be in a particular sector that we don't love. Natural gas is a perfect example. It's in the energy sector, but it's creating change, and it's better than investing in oil and coal. And even within natural gas, we only want to be in the best companies in the natural gas industry. Those that are innovating, leading the charge, they're not fighting transparency issues and regulations. And within that category, all of this, we also try to do, as David mentioned as well, a lot of advocating within those organizations, either direct engagement, we have conversations to make them better corporations, or by voting shareholder proxies. And then there's also a term we use called impact investing, where you get really focused and try to have, in a direct investment, high impact investing, and I would consider New Hampshire Community Loan Fund one of our high impact investments. And so we really believe in the power of best-in-class investing. At a forum like this recently, Joe Keefe, who heads PACs, once said, we've been divesting from guns for a long time, and where has that gotten us today? So I think that's interesting food for thought in this whole conversation. With best-in-class, we're supporting leaders, but we're also actively trying to create change. That being said, there are a number of people for their personal values, and I have a client just last month, a university out in Colorado, who decided to divest from the top 200, which if you've been following the 350.org movement and Bill McKibben, his mandate, he's trying to get universities and foundations to divest from the top 200 largest oil and gas and coal companies. And that's, our job as a consultant is to help educate, when this client came to us and said they have this thing they want to do, it's our job, one, to say, well, let's look at your portfolio. What's your exposure currently? And I find in most of our portfolios, energy right now is about 5 to 10%. And those are in portfolios that are pretty well screened. Also, working with very activist-oriented type investment managers. So where are you at right now? What is that you believe in? What do you want to do? And then we look at the options and the pros and cons, and we try to provide a lot of education so they can make an educated decision. This was about a 6-month process for this university. They did decide to divest, and we just pulled the top 200. They only had 4 or 5 companies, and each one of those companies, there was a high level of shareholder activism going on, but we pulled them out. So we have the ability to do that. And I think there's some managers that we work with, because that was part of the question that Sylvia posed to us. What are some investment solutions that we find interesting? One, PACS has a mutual fund that we really enjoy, both great financial return and also a past performance is not indicative of future performance. I have to throw that one in there. That was from my compliance officer, who has to review this recording before it can go public. PAC's Global Environmental Markets Fund is doing a lot around energy efficiency, water efficiencies, really trying to tackle environmental issues from a resource efficiency arena versus really focusing on alternative energy. And then Trillium out of Boston has a Sustainable Opportunities Fund. It's a fossil fuel-free portfolio. And then there's a firm called Aperio that's doing custom portfolios that can be free of fossil fuel. That there's some papers out on the internet if you pull up their research. That's a custom portfolio with a pretty high minimum though. So I think those are some of the more exciting things that we're doing around this particular area.
Thank you.
Add to that, as more and more people ask for this type of investment, companies like Pax World and others come to the marketplace with some of the options that Allison had mentioned. There's a couple of others. One is called the Shelfing Green Alpha Fund, which is a fossil-free fund that's come to the marketplace, done very well. Pax has the Global Environmental Markets, which is, I believe, fossil-free. And then another well-known fossil-free fund that's done very well is Green Century Balance Fund, which is another fund. So as more and more people ask for that, as they've been doing over the last year, 2 years, 3 years, those start to come to the marketplace. I think there's even a green fossil-free ETF that's out now as well. But that's just an example of more people ask, then companies start to bring that to the marketplace, and it's satisfying the need.
So at Pax World, we come up with things for Allison and like to talk about.
We appreciate that.
Yeah, I do what we can. Our thoughts on divestment, we realize that fossil fuel is a really big issue, and it's a big issue because climate change is such a big issue. At Pax World, we have divested, or more appropriately, we have prohibited future investment in what we consider the most carbon intensive and the dirtiest of fossil fuels. So we will not invest in companies that are primarily engaged in coal mining or Canadian tar sands. We feel that is just so energy intensive, and it puts a fuel into the world that is so carbon intensive that when burned, it's going to do a lot to cause climate change. We have not gone as far as organizations like 350.org and advocate for divestment of all fossil fuel companies. We feel that there has to be a bridge between where we are today and where we're going to be in the future with a low carbon economy. And we think that one of the most realistic ways to get there is by investing in companies that are involved in natural gas. And like Allison was saying, we're trying to find the companies that are involved in natural gas that are doing the best job among their peer group. So we're really trying to pay very close attention to what their environmental record is like, what are they disclosing to the communities where they are engaged in natural gas fracking operations. We want to know about what kind of chemicals they're using there. And then we also are engaging those companies to try and get more information and also to push them to adopt more sustainable practices. So we're talking with some of those companies right now about what is the method that they're using for drilling for natural gas. Are they doing what are called green completions? And one of the things that's very important about green completions is that it reduces the chance for fugitive methane emissions on the drilling pad. And that's very important because methane is actually, depending on what life cycle of methane in the atmosphere, is anywhere between 25 to 100 times more potent than carbon dioxide as a greenhouse gas. So we're really focused on making sure that these companies are doing everything they can to keep that kind of gas enclosed. So that's kind of where we are in terms of the fossil fuel companies themselves. We're also trying to, as Allison was mentioning, one of our funds really does focus on resource efficiency. And part of that is water efficiency, part of it is energy efficiency. So the premise there is that resources are going to get more and more scarce because there are just fewer of them and there are more people on the planet that are trying to use them. But it's also more important to be very efficient with the energy that we have, because we don't have the ability to put carbon dioxide into the atmosphere ad nauseum. We have to slow that down and eventually stop and stabilize the amount of carbon that we're putting into the atmosphere. So we're really focused on companies that are providing energy solutions. And sometimes it's very basic stuff. One of the companies that we invest in is called Kingspan Group. And it is a company in Ireland that makes insulation to put in the walls and roofs and the attics of your house. It's very basic, but it's also really focused on affordable and very wide market. There's wide market adaption or wide market uptake of the idea that you could make more energy efficient houses, and that's a really good way to combat climate change. So we're really
What's the company's name, the island?
Kingspan.
Kingspan,
You
thank
can
you.
go to our website and I'm sure there's more information about it there. So we're trying to invest in companies that are, avoid the dirtiest ones, we're trying to invest in the ones that are doing their best to be more sustainable in their operations, and at the same time we're also trying to find solutions with companies that are trying to address the issue of climate change through efficiency and the like.
Say very simply that by divesting, you need to find alternative investments, and I would suggest that a community investment where you can see what your money's doing, you get paid back after a certain term, you're earning interest on your money. It's a very simple way to invest, and I will say also past performance is no guarantee, but in 30 years we've never failed to repay any of our investors, not a penny. So.
I talk about the community side of that and the local side of that, which I agree that is a great way. If you're investing in something like the community loan fund, you really do see where that money is going, and you know what the impacts of that are, both positive and negative impacts. It's easier to follow those. And this idea of local investing, which I'm hoping in the future there's going to be more types of investments and more types of structures to utilize in the future. I think they're going to be probably coming out there more and more. There's a few different models that are out there right now to try and get some of your money invested in your local economy. And I think what's good about that is, there's a few things. I wrote a few notes here, is local-based economies reduce the need to burn fossil fuels to transport goods. So it's actually very positive if you're putting your money into your local economy. You're going to be inherently, by its nature, reducing the amount of fossil fuels used. And another part of the concept or idea of local investing is that if you invest in people locally, the decision makers, the people who are making decisions in those businesses, they're going to be making decisions about what is affecting their own community. So they're going to be feeling the impacts of the decisions they make, and that includes environmental impacts. So, you know, there's a lot of people who are hoping that there will be more vehicles in the future to move more of your money into your own local economy, and that will help people reduce some of these environmental impacts.
Either directly or indirectly that you want to add to that, you know, stemming the tide of climate change, other avenues, you mentioned water, you know, water resources.
I think Bob made a good point about the environmental impacts locally and who is consuming those fossil fuels. It's also very important to take a look at, so that you've gotten the fossil fuels out of the ground, that's one avenue you have to address, but the other one is who is consuming those fossil fuels, and try and engage those consumers. So, as you might imagine, one of the biggest consumers of fossil fuels in the United States are utility companies. And we think it's very important to talk to them about what are their plans for building new power plants. As old ones come offline and they need to build new ones, these are very long-lived assets. So they're going to be around. If you build a power plant, it's going to be around for 50, 75 years or so. So we really want to make sure that climate change considerations are taken into account as they plan on building the next new power plant. And so part of that is hopefully to discourage them from building coal-fired power plants, and the EPA is certainly helping make the math work out against coal-fired power plants. But the other part is to make sure that they are building them in a way and taking into account what their carbon footprint is going to be. So not just building natural gas-fired power plants, but hopefully developing renewable energy. So solar, geothermal, wind, etc. And then hopefully push investment in a smart grid to make this kind of low-carbon economy and low-carbon energy distribution more of a reality.
And I believe too, talking about that, there is legislation to create a green master limited partnerships. And so to date, there's these investment vehicles called master limited partnerships that help people invest into companies with tax incentives to companies that utilize natural resources. And there is legislation now. I don't know where it is, if it's passed or not.
It's in the process.
It's in the process, okay, yeah. but it will be just for green energy resources, so it will help put that kind of investment vehicle on an even playing field. So it will be an investment vehicle to use in which you will be investing in green energy. So that's a positive development.
And we'd find out if financial managers, or it would just be public information through the
That particular legislation?
energy companies would tell us.
MLPs, I'm not sure, but investment advisors.
We make MLPs available, none of those are yet, obviously, but as MLP become available, we do present that as part of a portfolio or an option within a portfolio that someone can use.
Can you identify the acronyms you guys use? MLP.
MLP, Master Limited Partnership.
All right, what ways does your organization or institution act most visibly and strongly to create social change?
I'll start that. Are you just asking any of us?
Yes.
Okay. Our organization was founded on the vision of social change, to change people's behavior through the movement of capital, to actually make money be a catalyst for people to actually help people that are less fortunate. Our two founding beliefs are, one, that the barriers to success for low-income people, very often the major barrier is access to fair capital. You know, you hear about payday lending, you know, and all those things that really take advantage of people. So our belief is that that's a huge barrier to building assets and getting ahead in the world. And the second belief is that there are people and organizations out there with plenty of capital that would be willing to lend money and help people of lower income if there was a safe way to do it. Our first investors were the Sisters of Mercy back in 1984. They lent us $43,000 to actually then lend to a community mobile home park up in Meredith, New Hampshire, that was actually going to be sold. Now, these people who live in mobile home parks don't usually own the land. They'll own their home, but they don't own the land, so that when a park is sold, they're out of luck. These homes are not mobile anymore. So what the Sisters of Mercy were doing for us was lending us the capital that we could then lend to help this community organize and buy their own land, form a cooperative. We helped them do all that. But anyway, but they wouldn't be the first, if the park failed, the new cooperative failed, they would be the ones that would have to foreclose. We're the ones that take the risk. We're the ones that clean up the mess, if there is any. And they didn't want to see nuns foreclose on low-income people. The union leader, you know. So anyway, we're the catalyst. We actually take the risk, we do the underwriting, and we make the loans that banks will not make. Banks can't make them. It's not that they're bad guys or anything like that. It's that guys and gals, excuse me. But it's that they have a regulatory box that they have to function in. We can restructure loans and help people out during hard times, and that's what we do. We're a nonprofit organization, so our mission is not to do the next transaction, it's to help the next person. So in that way, we have helped to change, to promote social change because we help our borrowers be successful. There are many banks now that before we came on the scene, they wouldn't touch these, you know, they would never have lent the money. Now they argue over who gets to participate in the next loan, because these are all, none of these have ever failed. And these are one of the safest loans we make are to the mobile home parks. We call them now resident-owned communities. That's ROC, resident-owned communities. So if you ever hear ROC and H or ROC USA, that's what we're talking about.
Thank you, Sam. So I would say our clients have a number of interests that we incorporate into their portfolios, and every client is different. But social justice is definitely a large part of our work in addition to environmental issues. That could be creating a more sustainable agriculture system, so trying to place money in local food systems, or avoiding Monsanto so that that helps the local farm economy, food economies. I think another thing that really excites me, and it's another thought piece that I brought along, is using our portfolios to support and empower women. So we've been doing quite a bit of work at Veris around applying a gender lens to our portfolios, and how can we use the flow of capital not only to support a woman as an investor and empower her to make money management decisions, but through the investments that we make, how are we empowering a woman money manager? How are we supporting products and services that empower women? So that's another major theme that we're seeing in our portfolios. Another area that I've seen come up through a lot of conversations with clients is supporting indigenous cultures, whether that's here in the US when you have a natural gas company that's starting to buy up land so that they can hydrofrack, or if it's down in the Amazon, companies that are infringing on tribal lands because they want to develop oil reserves, etc. So I think those are a number of different ways that we're actively helping our clients use their portfolios for social change.
And I understand in governance whereby if there are more than 3 women on a managing board of any institution, then it does have a better bottom line.
So a lot of our managers, I need to clarify, we're consultants. I don't buy and sell stock. I'm not a stockbroker. What I do is I hire managers like PAX World Funds who, louder? Thank you. We hire managers who we feel are the best in their particular asset class, so the best international manager, the best bond portfolio manager. Then we also look at the managers that have particular expertises in social justice or environmental issues. PAX, I love their environmental markets fund, but they also have a number of things that they're doing to support and empower women. They have a portfolio that is geared just towards women. I can't remember the name of it.
Global Women's Equality Fund.
Thank you. So there are a number of ways, and one of the particular strategies that a manager might use is by looking at the diversity on boards and diversity of a management team. And certainly we've seen a number of studies, not just women, but also other types of diversity, that when you have a group of people making decisions, the more diverse the group, the better decision making is happening within that organization. And we like 3 because 1 woman is considered a token. 2 women are still somewhat of a target. You don't have a tipping point on a committee until you have 3 women represented and they feel comfortable to be able to speak up and to be heard. And there's 2 organizations that are doing a lot of work if you're interested in that topic. There's 2020 Women on Boards, and then I know Joe's involved in
30% Coalition.
30% Coalition. And those are referenced in our white paper.
Also, asked me to help them a little bit. Sorry to interrupt.
Thank you.
Well,
It's all helpful.
At PAX World, one of the issues that Allison was a great lead into, we are very focused on gender equality. And one of our funds, the Global Women's Equality Fund, tries to focus on that issue exactly. So trying to invest in companies that are leaders on gender equality. So promoting women into senior leadership teams at companies, trying to do what they can to promote gender equality. So focusing on gender pay equity, making sure that women are being paid the same amount as men for the same job. And also trying to promote gender empowerment throughout the company's supply chain and its operations. And I'm sure you've all heard of the recent tragedy in Bangladesh where over 1,000 workers were killed in a factory collapse. And it disproportionately affected women. 80% of the people that were killed in that factory collapse were women. And we feel it's very important for companies that have supply chain operations throughout areas like Bangladesh or anywhere in the world really, to do what they can to empower women throughout. So it's not just the women in the senior executive suite, it's the women who are also working on the factory floor. And so what we did at PAX World was to write to all of the apparel companies that we own in our portfolios and ask them to adopt the UN's Women's Empowerment Principles. And it's a set of guidelines that really sort of lays out a roadmap what companies can do to promote gender empowerment throughout their operations. And we've heard back from some of them, and it's been very encouraging. And there are some answers that we got from companies that we feel could be better. So we're going to try and focus our efforts in those areas to try and get those companies to improve. And companies that we have not heard back from, we really want to engage again and try and start a conversation, because we feel like that's going to be the best way to change the nature of how business is done at those companies. We have other projects, Allison mentioned a few of them. We also, at PAX World, some of our investments are in organizations like the New Hampshire Community Loan Fund. If anybody's from Maine, we also have investments with the Coastal Enterprises Institute. So we are very much focused on trying to put some of the money in our funds. There are challenges, legal stuff, but we try and put money to work with those organizations as well.
One thing which hasn't been mentioned, which probably should be, is that if you own a stock, you're a shareholder in that company, and you have the ability to vote on shareholder resolutions. And we encourage our clients, we offer a service called proxy alerts, so that if an issue comes up for a stock that you might own that you want to vote on, we let you know about the issues and how to vote on it. So it's another way of changing the structure of the company to pay attention to shareholders and to, institute social change for the better.
I wanted to ask you, could I, on that question,
Yeah.
about trying to encourage. Most of our, in fact, all of our investments at FUUSE here are in funds. Can you do the same with fund management companies as you can, as you were just suggesting,
Probably the best answer by David, but yeah.
with securities?
So we try and be, at PAX World, we are responsible for voting all the proxies that we get on behalf of our shareholders. And we try to be as transparent as possible about what we're doing. I'm going to start yelling at you now. Part of it's enthusiasm, but part of it's because she's telling me to be louder. So,
All these white-haired people, you know.
I felt like this.
That's it, sorry about that.
I don't know. So part of what we're trying to do is to make sure that our shareholders know how we're voting. We want to be accountable to our shareholders. So we publish all of our proxy votes on our website. We have been doing that for years. The SEC now requires fund companies to disclose their proxy votes at the end of the year. So from July 1st to June 30th, you can look up the SEC website and find out how any publicly traded or publicly available mutual fund company has voted its proxies. At PAX World, you can go to our website and see how we voted it right then and there. And to his point about being able to vote your own proxies, we also disclose proxy votes for companies whose meetings are upcoming, that we own at least. And so you can see how PAX World voted on particular environmental proposals or social proposals, but also management proposals. Who did we say we want back in the boardroom representing our shareholders versus who do we think shouldn't be there? How do we vote on issues related to executive compensation, et cetera? And with the gender lens that Allison was talking about, we feel that we want companies with women on the board of directors, and when there aren't women on the board of directors, or when there are very few women on the board of directors, we withhold votes from the men, and we write to the company, we write to the chairman, and we write to the the chief of the nominating committee, and explain why we withheld our votes from all the directors except the women nominees. And it's really, we find that it's sometimes a little bit in your face, and we get some letters back that are not friendly. But we also get some letters back that are very encouraging. And just this past summer, we actually, this sounds funny, we're sitting in our office trying to figure out whose turn it is to unload the dishwasher, and we got a call from the CEO of one of the companies in our portfolios that wanted to know more and wanted to talk to us about how to put more women on his board of directors. And it was really encouraging. It's not an overnight process, as you might imagine, but it was really encouraging to see that these companies were taking this issue seriously and really wanted to figure out how to make their how to make their senior leadership more representative of all their employees and their customers.
So that's something we could do
Yeah.
here at FUUSE, is to check on these issues.
It's a great question, and the first thing that you could do if you have a portfolio of mutual funds, if it's a traditional mutual fund company, they're very likely not voting with your personal values. If you want a mutual fund company that's going to be voting on environmental issues, supporting social justice issues, you need to look within the field of socially responsible and sustainable mutual fund companies. Those are the companies that are going to be taking the efforts David's talking about to create the change that many of us value here in this room. And if you need an idea of what those are, if you're not working with an advisor, if you're doing your own portfolio, social funds, is it socialfunds.org? Or US SIP?
Just go to Wikipedia.
But there are organizations.
There are organizations.
They have all of them.
Social Investment Forum.
Social Investment Forum has a list of pretty much all of the mutual funds in the US that are using these kinds of strategies when they vote.
Yeah.
I believe it's SIF.org.
Yes, I think so.
USSIP.org. USSIP.org.
Yeah.
It's a really good website.
Yes.
And social funds also, they've got one that is a comparative list. They'll show you by asset class, whether you're investing in an international manager or a US large cap manager, a bond portfolio. They'll give you some performance information. It's a very nice, concise resource.
I'm sorry, one more question on this subject. Where can you find the results of these funds?
On social funds.
The same sites?
Yes.
Yes? Because that's also very important.
And that is true, not all resolutions are binding, correct? Or shareholder resolutions, so there is an issue regarding that as well.
So you can see how hard these people work. They're amazing people, and I appreciate so much what they do every day. I think it grew out of Pax World's, that kind of formula where you look at the environmental concerns, the social justice in the workplace, and the governance that we've covered here. But I'm sure you have more questions of them, and we have a wealth of talent here to respond. So let's take a look at your questions, and we'll write them down and then gather them up and give them back to our panelists as they think about what they would like to address most. So, questions?
Worked for Reuters.
Reuters, yes, and Dow Jones.
And for Dow Jones.
Yes.
And I want to tell you, so did I.
Yes.
Yes. I worked for Reuters for 10 years, and I was a financial.
Sure.
I still am a financial journalist, but I started with Reuters.
Yes.
And it's not many people who work both for Reuters and Dow Jones because they're deadly enemies. They compete. And so for 10 years I worked for Reuters, and then I flipped to Dow Jones.
Right. And where did you work in New York or
London,
Boston? Or?
Brussels, New York.
Oh, great. Great.
Yeah.
I was in New York and Boston.
Yeah.
And I worked actually for a company that was owned by Dow Jones called Telerate.
Telerate.
Yes.
I know
That's-
Telerate very well.
And everyone would know Telerate if it weren't for the fact that Bloomberg came in and sort
Right.
of
Michael
took our lunch.
Bloomberg took it over. No, I just wanted to
Well,
say
he didn't
that.
take it over, he just outdid us.
Outdid it.
That's right, that's right.
Anyway, hello.
Along with the rest, but do you have a comment on Harvard's recent decision to not divest?
Disappointing.
Disappointing?
Disappointing.
Yeah, I think it's very disappointing. It's also very much so the nature of a lot of these large institutions with these endowment investment committees, that most of the people on these investment committees they're investment managers or former investment managers themselves. And they have and this is not just the same not just with universities, but it's also very similar in a lot of foundations, that often there's a little bit of a disconnect between these investment committees and the missions of these organizations. So that's why you see at a lot of universities people, the kids saying, we need to divest from fossil fuels, but the endowment committee saying, no way, we're going to do that. And part of it is because that's their culture from where they came from, and they believe in having a lot of diversification in their portfolio, and energy is a very big part of that. And also there is an argument that people make that, well, by divesting from certain sectors, is that going to hurt our return? And so, and that is something that there is a big back and forth battle about.
What do we do? I know the news said she felt the endowment should not be used as social leverage.
Why not?
But
Why
that's
not?
the same thing they said about apartheid,
Right.
they basically divested from apartheid. But, it's a process, I guess, and I'm not defending them in any sense of the word. It is disappointing. But if they continue to get pressure, and I know that the organization that was behind trying to get Harvard to divest said, this is fine, we expected this, it's disappointing when we expected it, it's just going to make us fight harder, which means that, they're just going to come back again and say, these are the reasons why you need to do it, and we'll get more support when we do it next time. And eventually, I think they'll come around, like they did with apartheid.
David and I have both been very involved at UNH. I have both student groups at UNH that have been trying to encourage divestment and more responsible practices. I would love to just see more institutional investors, whether that's an endowment, a foundation, or the state retirement programs. I mean, those are the largest investors that we have here in the US. If they all took some step, and some of them are, California is a very progressive system. They tend to be the leaders on a lot of these issues, the state retirement program there. But if they all took some steps to just be more responsible, it would have shockwaves throughout the system, and that's all I would really like to see, is just start being more cognizant. Because every portfolio, this is one of my colleagues kind of coined this phrase, but every portfolio has an impact, whether you put an intention behind it or not. And often, especially when you look at a foundation or a university like University of New Hampshire that has a huge sustainability program, it's the first endowed sustainability program in the entire United States. And they have, Class A research happening on climate change. And you look at their portfolio, the work that they're doing and supporting on campus and working their butts off to get research dollars to fund could be completely contradicting what's going on in their portfolio. So just the smallest steps. And I'm not sure if I'm supposed to share this with you, but I did learn last week that they did vote, the board, not to change the main portfolio, but they are going to start a separate sleeve for new dollars coming in. So if you have a bequest at UNH, you can send a letter to the foundation and tell them that you want your bequest or your donations to go into the new sustainable sleeve that's hot off the press. But any change that these large organizations make have big changes to the system, the whole way that we manage money, that we manage our corporations.
I think in terms of private organizations, so it could be endowments or foundations and the like, I think there's a difference between those organizations deciding to divest of fossil fuels versus asking a public pension fund to do so. And some of them can't do it by law. The requirements of fiduciary duty prohibit them from actually doing that. And so there's an effort to figure out what is the actual definition of fiduciary duty and see if that can be expanded to include issues like climate change and investing in fossil fuel companies. But at the moment, they can't do it. And I think that in terms of divesting from fossil fuel companies in a portfolio overall, I think it gets to, I'm not sure whose question it was, but about the invest and engage versus divestment. I think that's a very good question. And at Pax World, we've tried to figure out when are you going to be knocking at the door and nobody's going to answer. A coal mining company is probably always going to be a coal mining company. That's all there is to it. Canadian tar sands company is probably always going to be a Canadian tar sands company. But where we feel that there has to be that transition to a lower carbon economy, and we think that some fossil fuel companies, namely the natural gas companies, are going to be part of that. We don't feel like natural gas is the answer to everything, but we feel it is a bridge. It's going to be the fuel for the next 10, 15 years or so. So we do feel like it's important to engage those companies because they can go about the process of getting that natural gas in a more responsible way and we want to engage them on that issue and help that happen. But we also want to engage all the other companies in our portfolio. And to Bob's comment, energy is a big portion of the portfolio of many benchmarks, roughly 10 to 15% or so. But that means there's also 85 to 90% that are not energy companies that are most likely consuming fossil fuels. So we at Pax World are trying to figure out how can we engage that other 85, 90% to become more responsible, to become more energy efficient, to shift towards lower carbon fuel sources, to develop renewables, to promote the use of renewables. There's a whole bunch of stuff that can really be done. So the divestment movement, while I think it's great because it has a lot of people fired up, I think it probably has a lot of us out here tonight because of that question of divestment. I think it's also important to think about the bigger picture. How do we address climate change, not just divesting from fossil fuels?
That's a really good point. One of the things as we've been doing our research on fossil fuel-free portfolios is there's no carbon-free portfolio. And I like to think of this, take it down to a very personal level and just your own decisions within your household. You are all probably very passionate about climate change and environmental issues. What are the decisions that you're making within your own household to reduce your carbon footprint? Or within this building as, you know, a green sanctuary, I don't know if you have that designation. You know, what steps are you taking on a daily basis? And it's the same kind of decision making that you make in a portfolio. There's always a little bit of give and take about what you can and are willing to do. We need light here tonight. that takes fossil fuel. You know, unless you have solar panels that have stored batteries, and you know, lighting would not be sufficient for the camera tonight. I mean, candles. So that's just a different way to think about this issue as well.
One try to lobby or address legislation on this topic. I mean, I hear you saying that we need to each look at ourselves and our homes, and also look at these companies the way they're using fuels.
Well, as citizens, I would say it's very important to engage your elected officials, engage your congressmen. 350.org is a very good organization. That's the organization headed by Bill McKibben, and he's trying to do a lot of work, a lot of real grassroots work to bring attention to the problems of climate change. So yeah, I would say you can certainly vote with your dollars in terms of how you invest. That's important, but also as a citizen, I think that it's incumbent on all of us to reach out to our elected representatives.
So, hey, could I just, since you gave a lead into 350, I'm on the leadership committee for 350 New Hampshire, and I think we're just trying to get the visibility. There's a national organization that has a lot of visibility, but what we're really focusing on is, for this state, locally what we're doing and working on the divestment stuff at UNH and Dartmouth and PEA is part of it. But also the pipeline in New Hampshire, in northern New Hampshire, which a lot of people don't even know about, and the coal end of it. So just what we're looking to do is to get the more local energy going from the 350 end of it. And that is an unpaid political announcement.
Well, that's one other thing I'd like to say quickly is another type, I mean, people don't think of this as a traditional investment, but if you do take some of your money and put it into solar panels, that's a great way. And, depending on how your house is situated, if it's southern exposed, things like that, it can actually save you money in the long run. A lot of times there's long paybacks, but you can think of that as a way, as an investment in for yourself. So that's another thing that I would encourage. I haven't been able to do it yet.
I was going to say, one of the things that we've been doing, and I have to read this, I'm sorry, I don't have it in my head yet, but we've been working with the legislature on a couple of things. And again, this is not only helping to change behavior, but also to help low-income people benefit from these changes. So this is kind of a double whammy. First, we worked in the legislature successfully on a bill that sets aside at least 15% of the revenues from the New Hampshire sale of carbon allowances through RGGI, which is the Regional Greenhouse Gas Initiative, for ongoing weatherization of low-income homes. The governor has signed that bill into law. And we've also lobbied in favor of the group, it's called Group Net Metering. I don't know if anyone's heard of it. This is all brand new information to me as well. It's a bill which is now law. The bill will allow groups of homeowners to install the cellular panels to then any extra electricity they'll sell back to the grid, and they're exploring ways to make this economically sustainable venture for residents of our resident-owned communities through a great deal of work that's been done at this point in time. So not only helping low-income people, but helping them become part of the solution, which is, I think, incredible.
Well,
I just wanted to plug that, sorry.
Sure.
Transportation and using alternative fuels, and I see so much need for that. Public transportation, that's a place we could ask our legislators to look at strongly. Do you know other avenues besides, what can we do about our public transportation and alternative fuels?
That's a tough one. There are companies that are in the business of building public transportation infrastructure, but the people that pay for that are usually governments, and so it's a question of how do you encourage those governments to adopt smart public transportation systems and then make those transportation systems as green as possible. At Paxwood, we do invest in some of those companies that are involved in building public transportation infrastructure, but I would be hard-pressed to say off the cuff how many of those are powered by green fuels or alternative fuels or something like that. But that's the bigger issue. Is one of the investment themes of our fund is that those kinds of projects are going to become more common, and that governments are going to be looking for this kind of public transportation, so we want to be invested in the companies that are going to build them. So.
There are also green bonds, if you will, where if a municipality is trying to raise money for such a project, you can get a hold of a bond that supports that. I mean, it's been, fixed income bonds has been a difficult area to find green investments in. It's becoming more and more available as these bonds come to the marketplace, and you can actually seek those.
So there were more tax incentives at one time. I'm not sure if the tax incentives are out there for private owners like there used to be. I'm not sure if they've, there are plug-in cars now, right? Now, I don't know if that's necessarily a solution because it's still using electricity, which is powered by coal, et cetera, nuclear. But I think there are tax incentives for plug-in cars now. I'm not sure if there's still plug-in or tax incentives for privately owned hybrid cars, or how much there is left in as a tax incentive or tax rebate. I don't know if there's any kind of a tax incentive now for government purchasing public transportation that could be considered green. Or I know that there are some model towns that use, for example, soybean oil or biodiesel, or even very clean compressed natural gas or something like that, right? And it seems to be working for them. I don't know if they got an initial incentive from the government, or were able to get some type of a loan or just outright something to get them started to make that happen. But there are in many cities, I think, right, they're in a good place because of them taking that initiative. Again, I don't know if there is an incentive for investors to invest in those kind of projects. Just a question. Maybe it could encourage more.
Right.
You've talked a lot about proxies and other ways to call in change on companies, but how much patience should we have with these companies? Should we stay with them and hope they change, or just get out of them?
So long. That's a tough one.
Yeah, that is tough. I'm assuming everybody's looking at me.
He does the proxy voting for pets.
Right. And we're also the front lines of deciding when to say enough is enough. Things are not changing at these companies, and it's time to move on. There are times when it's not you could say we're going to sell out of a company because they're not responsive to something, and then on their own, years later, they could actually wind up doing what you were hoping. They could have had a catastrophic meltdown in between that has prompted them to actually do that, which is a reason that we would have, hopefully one of the reasons that we would have sold out of the company beforehand. But it is challenging to figure out when to make that call. And Allison was talking about this at the beginning of our discussion this evening, the issue of trying to find the companies that are best in class, the leaders among their peer group. And there are times when you're trying to choose between the 2 or 3 brown-nosing pupils at the front of the class, who shine their apple the brightest. There are some companies that really are very good at what they do. But there are other industries where it's really hard to choose a best in class. You might imagine I find it very hard to choose the leaders among large pharmaceutical companies. I certainly find it hard to choose among some of the large energy companies. I find it hard to choose among some of the large financial services companies. I could go on.
Insurance.
I actually find that to be easier at some level. But it does raise the question of when do you get out? And our goal is to get out of a company if we feel that their track record indicates that they have problems with a particular key ESG, an environmental, social, or governance issue in that industry that we feel that they are not adequately addressing, and we feel that that is a risk to our shareholders. And if we find that's the case, we will sell out. If we feel that the company is doing the best job among its peer group, we'll probably stay in, but it really is a very case-by-case call.
What about the multinational companies? Is there one that we considered trying really hard and trying to be all good?
Actually, it'd be interesting to see a raise of hands if we mentioned some multinational names. Who thinks those are good companies versus bad companies? Let me see, a multinational that you might have heard of. ExxonMobil, good or bad? How about bad? Raise the hand. All right. How about a multinational like IBM?
I don't know.
How about a multinational like Nike? Bad?
Oh, yeah.
How about a multinational like the Gap?
Probably bad.
Bad? Bad, raise your hands. So I think one end of the spectrum, or how about Unilever, large multinational. Well, I think it's interesting to see some of the range of, I think most people raised their hands for ExxonMobil as being a company that was pretty across the board bad in everybody's opinion. There were a lot of hands also for Nike and the Gap. But we found Nike and the Gap got in a lot of hot water in the late 1990s about sweatshop conditions throughout their supply chain. But what we've seen since then, this gets to the how are they going to change, things got so bad for those companies that they actually became leaders on improving conditions in those supply chains. So one of the things that we look for with companies that have apparel manufacturing or footwear manufacturing, it's not just an issue to say, oh no, we found sweatshop conditions in some factories that some of the tens of thousands of factories that supply our products, we're going to get out of them. We feel it's actually better for them to sit down with those suppliers and say, all right, how are we going to fix it? And so companies like Nike and the Gap that previously had gotten such a bad rap now actually have some of the best programs for engaging those suppliers and turning things around. So companies that get a very negative impression among some folks, when we're trying to do that really deep dive in our analysis at PAX, we're trying to figure out what are they trying to do to turn things around, trying to improve their sustainability profile. They're not perfect, and they're not perfect in everybody's minds. I think the hands around the room showed that. But we really are trying to find the companies that are doing the best that they can.
I was just going to say quickly, it is difficult too for a lot of people. You hear these names, and because, in a sense, we're very absentee, we have no idea what's really going on with these corporations and what they're doing in our own country or around the globe. And we have to rely on others, other experts, we have to rely on the media to help us navigate that. And it can be very complex, and a lot of times we really miss the boat on it, I think, completely. That's one of the things I like about hoping will happen if there will be more investment in communities, local investing. Because if you put your money right in your own community, there's going to be more of a chance that you'll know what's going on with it. You're going to know the people in the community who you're investing in. So that's part of the idea that I'm hoping will come to fruition one day, that there will be, it will be a way to invest some of your money anyway, and hopefully it will be more socially and environmentally sustainable.
A little while back, we were talking about problem companies, and several times you used the word large companies. And so what I'm wondering is there any kind of rule of thumb or whatever here? I mean, it sounds to me like small is beautiful. You know, I mean, the larger the company, the more potential for that company to be a problem company, as far as our values are concerned, seems to me. Does that mean that we try to stay away from large companies generally and focus more on smaller companies? You know, how do you deal with that issue?
So I think that's a really interesting question. Last year during the Occupy movement, we had a number of current clients and prospective clients coming to us saying, I want to get out of Wall Street. I just can't take it anymore. I don't want to be part of this system. Well, I find, I have a handful of clients that don't really need their portfolio. They're receiving gifts or they live off of a trust fund. But most of our clients, their money is what they're living off of, or they're gonna live off of it at some point when they retire. And I love local investing, and Sally knows one time I even said we were pushers. My compliance department didn't like that word. So now I use introducer of community investing. We are big, we have a number of clients, and I'm an investor at New Hampshire Community Loan Fund. They're just one of the number of community investments that we direct capital to. We also have a lot of private equity investments that are invested in very small companies. The challenge that, I did a similar thing as with the fossil fuel thing when we started looking at local versus, mainstream portfolios, is kind of try to educate people on the pros and cons of the decisions that we're making. You could go to a full local portfolio, but the returns can be lower if you're investing in community investment programs. The highest yield that you're going to get at New Hampshire Community Loan Fund, and this is one of the best rates in the country, is 5% for a 10-year commitment. When you look at that versus a U.S. large company and the returns historically off of that portfolio, there's a difference. And when I have clients that are trying to live off their portfolio, I go off of the 85+ year, almost 90 years of history that we have around financial markets to model the success of a portfolio to sustain your lifetime. So we instead will tend to have a mix. We believe that we can create impact across all asset classes, and we'll incorporate community investments and local investing for a piece of the portfolio. Then we tend to have a good portion that are in public markets, and then for our clients who can access it, because only certain people can invest in private equity, we will also incorporate change in small, emerging companies that are creating high level of change through private equity. But I think it's, there's a decision, and everybody's got to make the right decision for them based on their financial needs and their risk tolerance. I think the other thing, when our clients first started coming to us, one client said, I just want to have all my money at New Hampshire Community Loan Fund, Vermont Community Loan Fund, and one other note program. Like, okay, well, Irene just happened. And if we had another major climate event, you could have a serious jeopardy. None of those notes had any impact to the portfolio, but we're seeing more and more climate disruption that could affect your local economy. So it's another risk that we have to incorporate into our portfolio decision making. So I think it depends on your needs and your goals, but there's a lot of things to weigh in your decision making.
Yeah, by eliminating that asset class of large companies and focusing in on small companies, you create a level of risk that you may not be aware of, in that smaller companies tend to perform very well in a rising market, but very, very poorly in a down market, whereas larger companies can weather that storm a little better. So, as Allison was pointing, you want to weigh that risk of asset classes, large cap, small cap, and be aware that if you're going to eliminate a large portion and focus in on another smaller company, then it can create a lot of risk that would put the portfolio at jeopardy.
I would just ask this question too about disclosure. The publicly traded companies on the New York Stock Exchange, etc., are answerable to the SEC. The third quarter earnings are just about to be published in the next few weeks. We get huge detail on these large publicly traded companies, which gives us lots of information. How do we get that same kind of information for smaller companies based here in New Hampshire?
You don't as much. And that is a huge risk. And it's true, and to your question, sir, there's not a lot of options out there yet. I'm hoping, what I'm really hoping is that there will be more options in the future. And one of them that people have talked about is even having a mutual fund of smaller, locally based companies. And in fact, that such a mutual fund could be diversified by geography as well. Because Allison's right to point out that if you have all your money just in New Hampshire, what if there is some kind of a hurricane or a major devastation? All of a sudden, you have a huge risk to that one area. And another thing that a lot of people probably don't know is that most of us can only invest in publicly traded companies. How many people here know about what it means to be an accredited investor? Just a few people. Okay, that probably means you're not an accredited investor. So an accredited investor, basically, it means that there's rules that by the SEC that you cannot just take your money and invest in the local bakery or invest in the local coffee shop. There has to be a pre-existing relationship with that company. And this also creates a big roadblock for a lot of us if we do want to invest locally. But there has been, which is very interesting, it just happened last year, this legislation passed called the Jobs Act. And one of the stipulations it has is it's reducing the barriers to local investing. So there will be opportunities for people of more modest means, not the wealthy, to be an accredited investor. You have to have a salary of at least 200 grand a year.
250.
Or is it 250? Yeah. 250.
Expected to continue.
Yeah, or 300. It used to be 300 if you were a couple. Or you'd have to have net assets of about $1 million or something like that, correct? So, yeah. But they're decreasing some of these boundaries, which is interesting. And supposedly, starting next year, it's already law, but the SEC has to write a rule about it, and that is a very long, drawn-out process. There will be opportunities for people of modest means to invest small amounts of money in small privately owned companies. The last piece of that, he's right, though, is that one of the reasons they came up with the SEC to begin with was because there was fraud. And so so if you're a publicly traded company, you have to release reams of information to the SEC about your operations and about your activities. There is not that amount of requirements or regulations for small companies to do anything like that. So that is a concern too, and people are worried about that. And they're worried about, well, what if fraud occurs? And I think that is a legitimate worry. Fraud can occur. I do think, though, that part of the reason, a lot of these laws were established to begin with, way back when, they called them the blue laws. Okay? So a lot of the reasons the blue laws were established, it wasn't because there was someone in your own town necessarily defrauding you with an investment. Though I'm sure that happens plenty. One of the main reasons they first started coming up with the blue laws is because there was people from out of town, and they would come in and they would dress very nicely, and they were very slick, and they would say, oh, I have an oil field that you can invest in Texas, or very far away. And so someone would take all of their money and put it into that investment, and it was a fraud. So, but part of the idea about local investing is that you're going to know a lot of these people in your own community. It will hopefully lessen the degree of that ability for fraud to occur.
But what kind of company is added in our local community that you can invest in? I don't understand.
Sure. Well, it's typical. I don't know if you want to.
I was going to say that one of the ways that you can invest in local businesses is to invest in not just the Community Loan Fund of New Hampshire, but there's one in Vermont, and there are also 2 or 3 in Maine. And we all are investing in local businesses.
Like what? What would be local businesses?
Blake's Turkey
Brookfield-
Farm.
Blake's Turkey Farm, Brookford Farm, the
Rustic
brewery,
Crust.
Rustic Crust, thank you, you know these better than I do.
Heron
They're all
Pond.
in our annual report, actually. But there are many, I can get you names, but you're not, when you put your dollars in a community fund like ours, you're investing, say, $1,000, which is the minimum, and that money goes into a pool, so that part of your money goes out to different businesses or childcare centers or resident-owned communities, that kind of thing, but you're in a pool, so your money isn't directly going, but it's a portion of it is going to a local business, and it's, so that's a way of doing it, and we stand behind, in other words, we stand in between you and the company you are investing in failing, if you will. Does that make sense? Did I say that right? You're investing in us and we invest in the company. It is a little bit,
It's not like owning stock in a major corporation.
right, exactly. You're actually putting your money in a pool of investor funds that go into the community in different projects.
All right, I'm very passionate people. It's wonderful stuff. I'll wrap it up with the question about how do we find a local bank that won't be taken over?
Credit union.
Credit unions.
I did want to add one other thing. So I also, one of the other pieces of information that I brought is on B corporations. So one of the other ways that we create change as an organization is we are a certified B corporation. This is a national association. We have to be certified. I think it's like 40 pages of questions about our governance, our environmental impact, how we treat employees, how we make an impact on our community. Then we receive a score, and you have to have a minimum score before you can become a B corporation. Then we also change, we're a private company, we're an LLC, as I mentioned at the very beginning. We change our organizing documents so that if our owners ever decided to sell, they have to take into consideration not only their financial interests as the owners, but also the impact on the employees and the communities they operate in. There's now almost 900 B corporations in the US, 100 of them located outside of the US. There's also legislation in 17 states, including Delaware, just passed, and most corporations, many of them are located out of Delaware. Trying to change how companies do business so that they're more responsible. And a great example of this is Ben & Jerry's. When they went to sell Ben & Jerry's, if they were a certified B corporation, the shareholders wouldn't have had to have sold to the highest bidder. They could have thought about maybe the second or third bidder to buy them that might have done more for them as a community citizen. And they are now a B corporation, but they're now part of a large conglomerate. So I think it's a great way, if you're interested in creating change at the corporate level, to be part of the B Corp community. And there's several of them here in New England. Cabot Cheese is also a B corporation, and a number of small companies. So if you're very interested in helping the success of small businesses, B corporations is creating that community.
I do have to actually plug the event that Seacoast Local is going to be having on October 24th as well. It's called an Entrepreneur Showcase, and there's some flyers about it over there. And there's going to be 4 or 5 entrepreneurs from the local community that are looking for investment. Now, the degree to which you can invest in them will really depend and would have to be worked out between you and that entrepreneur. But this is our second showcase we've now had, and the first one went really well. And part of it is just to kind of learn about interesting new businesses and entrepreneurs who are trying to do something really neat in your community. So that's part of the fun. But some of it, there is an opportunity for people to invest. And there was one investment did come out of the last showcase, which was very exciting.
And since we're all putting in our last thoughts here, there was a question over there about if you invest with your values, socially, environmentally responsible investing, do you have to sacrifice return? And the short answer is no. There's been a lot of studies over the years because that's been a question, and it's been proven and come out that no, you don't have to sacrifice return. And I think that affects all of us.
Can you speak a little louder?
Yeah. So
You do not have to sacrifice financial return when you invest in your values. It's a held belief from way back when, that people thought if you did invest with your values, you had to sacrifice a little. You simply don't. And there's a lot of reasons behind it, I won't get into it, but there are also a lot of studies, and if you want, I can get those to you.
And you'll see that in the book, Local Dollars, Local Cents, which Water Street Books has kindly given us some copies of for you to peruse here. And I think there's one other book as well there, Slow Money. So both of those are fantastic books. I've read them, I endorse them. And so it is 5 minutes past. Do we have time for?
One more question from me?
Question?
And one from Neil.
Just a quick question.
Okay.
But you would agree that diversification is a good thing, right?
Yes, absolutely.
Diversification within and without sustainability, within and without the sustainability.
The sustainability field is so big.
Yes, you
That-
can do it all inside there, you think?
Everything is.
Yeah,
I don't think
yeah.
so, yes.
Of course, we don't, but I will
I would
tell
say-
you, I've just calculated the sustainability fund that we have at FUUSE, and this year, calendar, it has returned 23.86%. And the 5-year average is 10%. Just thought you'd like to know.
That's great.
It's called the Vanguard FTSE Social Index, FTSE for Financial Times.
Right,
Yeah,
right.
that one. Yeah. I just thought you'd like to know, but we have a good one.
Yeah.
As somebody who's come late to the process, I want to put in a plug for the credit union. I want people to know it's not just a bank. I remember, and you're not a customer, you're a member of the credit union in Durham, in my case. It's where I bank, or a car loan through that credit union. I have a Visa card through the credit union. Mortgage, everything goes through that credit union. And it's great because I know the people there, you know, the first name basis. All I have to do is call, I say, you know, move some money from this to that. Sure, Neil, glad to do it. It's a great thing, this credit union. I wish I had known more about it years ago.
It's a real community.
Yeah.
It's definitely.
So can I just say one thing about the UUA, because I know you asked about that. I just wanted to tell you that all congregations, UU congregations in New Hampshire that invest in the Community Loan Fund are matched by the UUA, dollar for dollar up to $10,000. So it's a wonderful way to double your gift. And we've been working with the UUA, I think, for more than 10 years before I came to the Community Loan Fund.
Really?
So, and I think they do it for other community investments in other states as well. So
Excellent. Well, that covers every question except if anyone has a report on challenges to gender equality in companies owned by Muslims. And
I don't know.
That's a tough one.
Knowing the companies in there.
right. So we can read up on that. I thank you for all of your questions. They were wonderful. And I'll just say, I thank our panelists. They give us great hope for reimagining ourselves. We're really critical players, and that's what the UUA has said. Our financial people at the UUA in Boston have said, we can affect the bottom line and all of our concerns, the ESGs that David's talked about. So we have that option to be the pioneers that good old Peter Buffett believes that we can be. So thank you to Pat Gosha and Marion Stanton for the work that they did to put this together tonight. And thank you to this panel. You were fabulous. And I'll say, if Wendell Berry could be any more wonderful, I don't know how he could be. He was recently on Bill Moyers, and if he were here, he might say, 100 years from now, it will not matter the sort of house I lived in, what my bank account was, or the car I drove. But the world may be different because I was important in the life of all the creatures on this earth.